watching India market close. It's been a bit of a rough day. We started off weak and have sustained at those levels of about half-odd% down through most of the day. The Nifty is still above the 24,100 mark, but holding up there in that sense because of the banks. It's HDFC Bank, Tata Motors, some stocks like that have been helping out. The Bank Nifty still in the green, but if you pull up sectoral indices, you get a sense of how this has been a fairly weak day overall. Pharma companies doing okay, but then you could say that's a bit of a defensive play. Some of the finance and banking stocks are okay. IT is where the big pain point has been, along with yesterday's winners, which is your public sector companies, metals, energy. Overall, that concern and that queue, which we saw spill over from US markets early this morning, continues, which is fears of a US recession and how that could impact consumption across all sectors. Let's pull up the advanced decline ratio before we get to the heat map, just to give you a sense of the width of the market. And look at that. It's been a complete zigzag kind of a day, with the bears finally coming out on top, at least right now. The declines outpacing the advances, 1131 to 945. Now let's come to the Nifty heat map and just give you a sense of what has worked in that bucket of 50 stocks. Tata Motors has been the winner through the day. HDFC Life now outpacing to the top spot, but Tata Motors, after the launch of its new EV Curve, saw a lot of positive notes coming in from research houses, from brokerages, and that has propelled the stock to the top of the charts right since this morning. We talked about financials making a comeback, but even the Bank Nifty has come off its highs of the day. So HDFC Life, HDFC Bank doing okay. SBI Life and HDFC Life actually for the second consecutive day doing fine. Remember, the finance minister spoke about GST on insurance, saying there were even higher levels before, but there is a persistent hope that the GST Council at some point will reduce the GST of 18% on insurance policies. Well, whether that happens or not, we'll have to see. A lot more red on the screen, though, and that really must be said. On the losing side, the IT company is really reeling because very sensitive to any kind of US economy impact. So LTI, Mindtree, Infosys, all of them at the bottom of the pile there. Asian Paints, Grasimos, with some of them which are doing fairly badly. I would say all in all, a day of a bit of weakness where stock-specific stories become more important, and many of those in the broader markets, Hersh, rather than on the Nifty 50.
Yes, Tamanna. Before I move to broader markets, we're seeing the mid-cap flat. Can we just pull up the small cap? But before I move on, I want to quickly look at the contributors list as well. So flat on the small cap. Well, let's pull up the Nifty contributors list if we can. And likely, I just want to try and point this out. 34 points contributed by HDFC. If I combine HDFC with Tata Motors, that's roughly 40 points out of the 70 positive. We'd be down 240 points, 1% plus. So this gash not looking as bad, likely because of those two stocks which are currently aiding the Nifty 50. We're down around 135, likely would have been down at least another 40. So yes, that's how we'd be. But let me quickly take it across to certain specific stocks which are in focus today. Let's pull up something like a Garware. Garware is up on the back of very strong numbers. A BASF second consecutive day, very strong numbers. Venky's as well, second consecutive day. Mind you, BASF and Venky's were up 20%, were on upper circuit yesterday. And that traction continues in trade today as well. I want to point out Symphony has been a rock star, at least this week. Another 10% on Symphony. MRF, again, very strong margins. Expectations of a 14% margin, which was roughly where it was in Q4 of FY24. The margin number has come in at 16.1. Stock up 5% plus. Bharat Forge, an ongoing con call. We'll continue to give you updates on that one as well, but up 3% on the back of strong numbers. ITD Cementation, if I can pull that stock up, very strong numbers yesterday. Stock is on a tear, up nearly 17% at the day's top, of course, has come off. BSE, we're going to talk about this, 8.5% higher. We're at 2600 now, back to those highs. GPPL, again, very strong numbers, sustaining the 60% plus margin number for something like GPPL, holding up 5% in trade today. Care and R Systems, relatively smaller companies, but very solid numbers overall when you're looking at them year on year. They're up both 2.5% and 3.5% respectively. Now, on to the losers. Let me pull up something like a Lemon Tree. Again, the numbers were weak, occupancy was down, and that's likely why the stock has reacted the way it has. Profit also down. Is it a one-off quarter or not? Need to wait and watch on that. Gokaldas Exports, again, weak set. Balaji Amines, weak set on that one as well. We're looking at Chemplast Sanmar on the positive side again, but you're seeing in terms of margins has gotten positive. Stock was up early in trade, currently down 5%. GMM Pfaudler as well as Abbott also declared their numbers. Stocks down roughly 4% and 3% respectively. Godrej Consumer is the top dog in terms of the consumer names, 2.5% down on the back of a weak top line hit by the Africa geography in terms of top line. Fusion Micro, second consecutive day. Yesterday was down 20, now down another 9, 13% credit costs, that one. Sangvi Movers down 7 again on the back of poor numbers as well as poor Q2 commentary coming through. Again, second consecutive day in the decline for Sangvi. Wasn't down or lower though yesterday. Just to note, one more stock I want to quickly mark on results. PCBL. Stock has been on a tear since the morning. If we can pull that one up. Again, results reaction. Very, very strong numbers that have come through from PCBL and the stock is up. Let's quickly mark that one as well. But I'm going to try and switch focus now on to some other news or news makers and buzzers on the back of other news. First off, on there you go, PCBL up nearly 5%. Order wins, Goldiam International order win, export order win in fact specifically, as well as TVS Supply Chain, again order win for TVS Supply Chain as well. Nazara Tech takes over Smash Entertainment, was already in liquidation, has now successfully taken it up 3.5%. There's also another piece of news on Nazara. They're infusing some money in their UK subsidiary. Tata Motors is up 2%. Tamanna spoke about it. New product launch, lots of positivity.
All right, one more piece of news coming in is on Vedanta. Let's just quickly pull up the Vedanta stock. This is an important bit. It's a Bloomberg report which says Vedanta's steel sale bid or steel business sale bid is being hit by regulatory clearances. So you might see a bit of pressure coming in on that stock at this point. At this point, about 9 rupees down. Kush Borad with us this afternoon. We're speaking with Rajesh Palve of Axis Securities. Welcome to both of you, and great to have you on the show. Kush, let's begin with whether you're seeing any upside right now. What's the strategy on the Nifty and the Bank Nifty? Bank Nifty, at least in recovery mode. The Nifty, not so much.
Hi, Tamanna. Hi, Rajesh. Well, the markets or the situation isn't really as gloomy or as drastic, as you made it in the opening statement. I think Hersh's energy sort of covered us for that. The reason I say that is because, the Monday lows and then perhaps even the Tuesday lows have been protected on the Nifty. Now, while, I remain a little skeptical on the upside, and the reason for that being that if you see the call basis for the next series, on the Nifty, today is almost done. But for the next series also, there are, a very massive call basis at 24,300, 24,500. So while the upside may be limited, I think we take heart from the fact that, the downsides also have been protected for the last 2 sessions at least. Also continuing with that optimism, I think Bank Nifty, it's been holding on to that 49,700 mark. I think that's a positive. So if Bank Nifty does come in and provide that support, Nifty is already seeing that sector rotation. And Bank Nifty taking charge will actually make a good cause for an upside. Just to be very clear, I see the near-term trend reversing only when Nifty crosses 24,500 and Bank Nifty crosses 51,000 or, thereabouts a little higher than that. So the upsides may be capped initially, but it's a good sign that, the lows are being defended at the moment.
Would you create fresh long positions right now, Kush, or you'd wait a bit?
If I were a trading man, I would keep stop losses at the low points of the last 2 days last 3 days rather for the Nifty and the Bank Nifty.
Let's get your picks in before we get to Rajesh's view on what's happening in the market right now. Any 2 or 3 calls for how much time we have left for trade today?
Maybe a little more than that as well, perhaps. I mean, if you widen the time frame. But I think one more reason for my cheer or my optimism is that at least your viewers will perhaps be smiling too. Is yesterday morning we gave 2 calls, one on Strides Pharma and the other one on Ipca Labs. Now Strides Pharma hit the second target of 1110 yesterday itself, and it's trading higher from there. And as I like to do with these momentum trades, once they hit target, is that you continue and you keep moving your stop losses higher. So basically, ride your profits. Ipca Labs has gone on and hit that second target today, and the second target on Ipca Labs was 1370. Here too, my suggestion is continue. Now you could trail your stop losses higher, perhaps a 1345, which was our first target, now acts as your stop loss. So continue riding the momentum in both Strides Pharma and Ipca Labs. That was the update. As far as fresh calls go, 2 of them. Axo Nobel, after a while, after a brief bit of consolidation, this stock is on the move again for the last 8-10 sessions. It's had a near vertical run, but it's still far away from overheating territories. So 3390, 3475 are the levels to look at as targets. 3200 is where you place your stop loss. Nava, this is one other stock. It's had a massive run from 500 to almost 900 plus levels in the last 2.5 months, but still a lot of room left on the upside. 990, 1040 are the targets. 890 is where you place your stop loss.
So 2-3 calls over there which you could look at, and they're all in the green right now. Rajesh, very good afternoon to you, and great to have you on the show as well. Let's just look at some of the numbers that have come in over the last couple of hours, and let's start with Bharat Forge. Some good commentary there as well, which has got the stock up and going, and the numbers were decent. In fact, the defense export orders and recovery in oil and gas business has sustained operating performance. This is something that Baba Kalyani has said after the numbers were out, and those statements quarter on quarter from Baba Kalyani have often seen quite a bit of stock moving impact. He goes on to say that we expect operating profitability to improve over the next 24 to 36 months. Weak commercial vehicle demand in Europe spoiled a stable quarter for overseas operations. We expect continued positive momentum in Indian entities in Q2 of FY25. Indian businesses will see improvement in operational parameters leading to loss reduction. So very positive outlook. Rajesh, Bharat Forge, something you're tracking? Any take on the numbers?
Yeah, good afternoon, Tamanna. So we have seen a significant cut in the stock in last couple of days. The stock is slipped below to 20-day, 50-day moving average. Again, in the pullback which we have saw in today's session, still struggling to cross this 20-day, 50-day trajectory. So I think on the higher side, the immediate supply zone is placed at around 1640, 1650 zone. Until the stock not crosses above 1640, it may remain under pressure. On the downside, the major support area is now placed at around 1570. So we believe some consolidation we can see in range of 1570 to 1640. Either side breakdown will decide the major direction for the stock from here onward.
Okay, that's the take on Bharat Forge. Just broadly speaking, Rajesh, the kind of relative up move we are seeing in the bank Nifty and in the financials right now, are you seeing that a start of a turnaround or a change in mood towards that sector?
It's difficult to say because it's still Bank Nifty is trading below to its 50-day moving average. Until the Bank Nifty not crosses above 50,600, I think still trend is remain on the bearish side only. Some of the stocks have shown some recovery from the lower level. The major contribution in the Bank Nifty and the banking pack is from the HDFC Bank only. But other banks are still struggling to cross their near-term supply zone. So we believe, we need to wait furthermore, to get more clarity on the Bank Nifty. On the data per se, 50,600, 700 on the Bank Nifty spot is key level to cross. Then yes, we may attract furthermore buying action in the banking stocks. Some buying action was there in PSU Bank from the lower level, but still we believe that furthermore another 1%, 2% kind of up move is required to come out from their near-term supply zone.
Okay, Rajesh, let's hear your picks for this afternoon.
So first pick is from the insurance space, that is ICICI Prudential. Stock has shown long built up in derivative data, and looking at the technical, stock is comfortably trading above to all its important moving averages. Stock is moving in upsloping channel on daily chart. Now stock managed to give breakout of September 2021 swing high. So it's a breakout on a monthly as well as on the yearly chart. So we believe that the kind of breakout which we are seeing on the ICICI Prudential, here is a potential that stock can continue furthermore upside. 765, 770 is the trading target for the stock. Keep stop loss of 725 to buy ICICI Prudential. One stock idea that is on the short side, that is Grasim. We have seen that in last couple of days stock has witnessed some supply pressure, and now stock is slipped below to 20-day, 50-day moving average. In the derivative front, again short built up is there in the stock. So looking at the structure, we believe that furthermore downside we can see in the Grasim. On the downside, we are projecting target towards 25.10. So one can go short in Grasim future with stop loss of 2590.
Okay. Another company that I want to talk about a bit is BSE, and we're going to get you a detailed lowdown of BSE versus NSE. BSE, of course, was listed. Numbers were out and has done just phenomenally well. Their Q1 numbers have been reflective of the launch of two products, the BankX as well. In fact, Hersh is joining us to give us a sense of what's worked for BSE and also a comparison with what numbers have come out for the NSE.
Absolutely, Tamanna. Let me first start off with the numbers themselves. Q1 FY25 been a standout quarter. And we'll come to the reasons, but just have a look at the numbers first. Revenue up 24%. You're seeing 2.5x in terms of profit from 107 to 264. And mind you, this is QOQ. And you're looking at EBITDA, which is 3x from 96 to 284. And your margin number has gone from 19.7 to 46.7%. Right? Believe that number? Yeah, absolutely. 46.7%. Let's quickly pull out the reasons why. First off, as Tamanna said, Sensex and BankX options introduced in FY24 have been a huge hit, and therefore those FY24 Q1 numbers may not be the right base to look at, but even Q4 FY24 numbers, you've seen significant growth there. Margins are a different ball game. You're looking at Q1 FY24 margins where the regulatory fee was based on the contract value and not based on the entire turnover. And now, basis the revised regulatory fee guideline by SEBI, you've had a regulatory fee which is based on total turnover. So there was some provisioning which happened in Q4 of FY24, which is why there's an anomaly with regard to the margin number when I'm looking at it sequentially. Now, let's pull out what's happened in Q1, BSE versus NSE. Revenue growth for BSE on a sequential basis, 25% nearly. BSE, on the other hand, just 2.5% growth. Now, let's look at the absolute margin number, how much it's gone up by. 21.5% sequential margin improvement, but that's because of the one-off we spoke about, and just 3.1 where NSE is concerned. Again, that is reflective of profit growth, 1.5x on the BSE, 3.2% on the NSE. That's how the numbers actually stack up. I'm just talking about the differential for both of these. Now let's quickly pull out what could start to play out in FY25. First off, brokerage rate rationalization. All brokers under a standard rate. Mind you, the larger brokers were subject to a different rate earlier by exchanges. That has to be standardized this year. That may impact revenues going forward. The second thing is only single product weekly expiry. Earlier, two products could expire every week, and therefore both exchanges used to opt for that on different days. Now it's only a single product allowed, and therefore that will limit or that may reduce the revenue and have an impact on revenue. And therefore, and with everything that SEBI has been doing, retail volumes may start to come off as well. So keep an eye out. We've had someone like a Nitin Kamath of Zerodha talking about how this could be the peak when it comes to trading and traders, and therefore have an impact also, have a knock-on impact on both exchanges as well as your AMCs, which are beneficiaries or brokers who are beneficiaries of this push that we've seen over the last 4 years in terms of volume. That may start to get hurt. So watch out. This may, whether it's the top or not really sure, but it's something that we need to be cautious about.
Okay, BSE and NSE, an interesting comparison there. Of course, if you want to have a play on that space, there's only one option, which is BSE. Meanwhile, just seeing the first cut of the AstraZeneca numbers and just pull up that chart, an astonishing plummet in margins from 22.7% to 9.8%. That drop even reflecting on the intraday chart. EBITDA is down 43% in this quarter, from 67 crores to 38 crores. This is consolidated year on year. Revenues, though, are up 31%. We have to see if there's any exceptional income, etc., because net losses are at 11, nearly 12 crores versus a profit at 53.86 crores. So not sure what really has gone wrong with AstraZeneca. We will try and get more details on that. But time for a very short break. We'll come back and speak with Ambit Asset Management CEO Sushant Bhansali. Stay tuned. Welcome back. Sushant Bhansali, CEO of Ambit Asset Management, joins us now on the show. Sushant, great to have you on and very good afternoon to you. Let's talk a bit about what is happening in the markets. Unable to sustain any kind of pullback and maybe very influenced with what's happening globally right now. Do you see this rough patch persisting?
We've seen a great bull run for last 4 odd years with a bit of time correction and consolidation in 2022-23. But since then, from March 2023 lows, the markets have been quite bullish, and there are dips which are quite minor, not more than I think a week. In fact, in 2024 itself, we had a few such occasions: February, March, and then during elections, and again last week when we saw some knee-jerk reactions. But one thing worth noticing across all these cycles in the recent past is that there's so much money waiting on the sidelines, and which is why the recovery has been so quick and swift. And we believe that the fundamental of equity investing has changed massively in this country in the last 5-6 years. And the culture of equity investment is increasing every passing day, and going down from tier 1 to tier 5 and tier 8 cities now. So that's a big fundamental shift. The mutual fund penetration has been increasing massively, and if things continue to do the same way for the next few years, then we'll have, I would say, massive expansion of equity assets in this country. The penetration is still very low. It's not even 4-5% from a savings basket perspective as per RBI data. So there is still loads of way to go.
Absolutely, I agree. A lot of way to go, and that's what's led to the bounce back. But my question is, how sustainable is it, Sushant, considering that, we were in a very different mood when the Nifty hit 25,000. Since then, struggling to stay above the 24,000 mark decisively. So where do you think that next push is going to come from? Do you see financials coming back into play? Do you see consumption coming back into the play? Where do you see the next big bet?
Definitely, I think IT has made a good comeback. Consumers, FMCG stocks have made a good comeback in the last couple of months, and they should, I think, especially after post-election results, these two sectors have seen massive inflows, and financials also are still, I would say, reasonably valued compared to many other sectors. And if you look at the 10-year multiples, the financials are trading at lowest multiples. So these three sectors are there. Then there will be few other sectors which are not very large, but in pockets, let's say chemicals, then pharma. These are sectors, I think, which will continue to do well in the next year or so. Now the mood at 25,000, I think, continues to be the, I would say same. Probably this is equity, and markets are not linear, so they will not grow every day or every week. But if you take long-term trends and look at on a quarterly basis, I would say that the next few quarters will continue to outshine for India.
Got it, Mr. Bhansali. This is Hersh also joining in. So, from whatever you've been saying, what I kind of gather is it's going to be difficult to see a significant fall at this point, at least. Where should the investor look or hunt for value, therefore? You've spoken about chemicals. Any specific names that you're looking at in terms of a good risk reward at this point, given where markets are? And any other sectors, spaces, names that you're looking at?
No, so financials and chemicals are value picks right now. Essentially, not because of any other reason, but because especially in chemicals, the earnings have been disappointing. The capex phase has been, I would say, more or less behind us. So earnings from here on should be quite positive, and year-on-year growth for the next couple of years in our view should do well. It is very difficult to play chemicals on a single stock name in our view, because in this country, every chemical company is very different. They have different molecules and different salts to which they cater to, and different processes. So it's always good to have a basket of companies to play this sector. Financials, again, I would say that across banks and NBFCs, there are many options. Many of them are trading at, I would say, lifetime or probably at least 10-15 year low valuation range. And the business, the earning at least there in that sector has not taken any big hit. And even though there might be minor flinch in terms of inch up of NPAs in the recent past, but still well below, I would say, everybody's appetite in terms of managing the risk on the NPAs.
Got it. And Mr. Bhansali, I want to also quiz you with regard to some other asset classes. You're looking at gold. You're looking at certain other commodities as a possible investment. You're also looking at real estate. You believe that equity is still the way to go at these levels? Should one move to bonds? Should one move to gold?
Yeah, so from a fixed income perspective, I think because I think there is no long term beyond 2-3 years if you take different asset classes. So from that perspective, getting into fixed income, booking at the yield which you are getting today is a no-brainer. We all will see falling interest rates now, whether it starts in few weeks or few months. Someday it will start, and will not get these rates back for at least 2 or 3 years from now. So a 3-year lock-in of debt does definitely make sense. From equity market perspective, compared to gold and real estate, I would say that equity offers some unique benefits, be it rationalization, which means you can invest any amount, whether it's 50 rupees or 50 lakhs or 50 crores or 50,000 crores. The market can absorb anything and provide you liquidity. Second is liquidity, that the day you want to either enter or exit, equity, I think, outpasses every other asset class at any amount. The third is taxation benefit. Again, I think compared to other asset classes, although now with the new changes, it's not that different, but still I would say the tax rates on equity is still much better than compared to real estate as such. And more importantly, I think I would say the price efficiency is the best in equity markets because it's not just one asset class, but within that asset class, various items you can get. And that price, whatever is quoted. So in real estate, a same property can be sold at plus minus 10% or plus minus 20%. It will all depend on how you negotiate. But on stock markets, I would say that the price efficiency is quite at a point of time, a price is there at which one can transact without getting worried that whether I got a good deal or a bad deal.
Sushant, the RBI governor today reiterated something that has been said for a while, a bit about how banks don't have enough pace of deposit growth. Some of it because household savings are not going to banks as they were earlier, maybe some of them coming to mutual funds, etc. And the second point about top-up loans in some cases being diverted towards other investments. He didn't mention derivatives or anything specific. So my question to you is that you said you're bullish on financials. Doesn't this very fundamental point concern you, that deposit growth is not keeping up with credit growth, and there doesn't seem to be anything in the picture that could change that dramatically?
Yeah, that's there that if you look at from a 10-year and 20-year perspective, the rates are coming down. Interest rates themselves are coming down. I'm sure most of these players, at least the efficient players, will be able to protect their margins in long term. There will always be a difference between efficient and not so efficient players. But will those margins, net interest margins, if you look at it, will they dwindle down massively? Probably no. I think there is lots of penetration yet to happen at the bottom of the pyramid in this country, where money is still kept in cash. Or probably not, or in gold or many other asset classes. As financialization of savings happen, I think more and more money will come to capital markets and banks both. Both of them are linked to each other and cannot live without each other. So we are not unnecessarily, I would say, looking at the NIM compression. There will always be temporarily bits and pieces, corrections which will happen, but long-term trends don't seems to suggest that there is no business to be a bank or a NBFC now.
All right. Thank you so much, Mr. Bansali. It's been good speaking with you, good getting that perspective. Let's quickly pull up a couple of stocks which are in focus due to numbers. Page Industries. Let's pull up the numbers on that one. Margins slightly lower on a year-on-year basis. Profit up just about 4.5%. You can see a huge reaction on the stock already. Clearly visible on the graph. We're at the day's low where Page Industries is concerned, down 1.7% now versus yesterday's close. I also want to pick up RVNL. Well, that one also reported a poor set of numbers. Revenue down 27%. Execution. EBITDA down 48%. EBITDA margins at 4.5 versus 6.3. And net profit down 35%. Well, the stock is down nearly 5% now in trade. Again, a knee-jerk reaction on that. But it's time to slip into a very short break. But remember, Indiabulls Housing Finance is now Samman Capital Limited. Jio Samman se. Keep watching NDTV Profit. We'll see you on the other side. Welcome back. You're watching India Market Close here on NDTV Profit. It's a tough market just in terms of the way in which it's moving. It's been difficult to predict. But as always, we have Agam standing by to break down the FNO cues for you. Agam, what's the FNO data indicating?
Oh, well, it was a testing market, Harsh, and you mentioned that it has been difficult. It is true because we've actually seen the Nifty move about 100 points in a span of 5 minutes, and it's happened more than a bunch of times in today's day of trade. And a lot was in and around the RBI monetary policy, and then, of course, the RBI governor, gave us a press conference, and that very sharp move, or rather a bunch of sharp moves, came through in a relatively range-bound market. So it certainly was a difficult market to trade, where I'd reckon that majority of buyers as well as sellers of options would have most likely lost money in this weekly options expiry. But as usual, I'll start off with the Nifty, which is coming off further now, but we're holding on to 24,000. That perhaps is the big positive here, and very little change in open interest. The Bank Nifty, of course, is also just marginally in the green, holding on to 50,000. Again, no change in open interest. Now, I was talking about the options market, and at the moment, it does seem like we're going to close somewhere around 24,200. And there's been a lot of to and fro in and around to 2400, but because the option premiums were also considerably low, which is why at least intraday trading would have been very, very challenging in today's day of trade, both from the buyers as well as sellers' point of view. Now let's talk about stocks. And again, a mixed day of trade. So MRF does stand out on the back of earnings, as does Alchem Laboratories, which saw longs. Shree Cement continues to wilt under pressure, down 4%. So shorts there. Even among stocks which are seeing unwinding, we have long unwinding for Apollo Tyres, and marginal moves for Chambal Fertilizers, Bata and Cummins. So wouldn't really want to mention those names. All in all, like I said, a mixed day of trade. And today's weakness was perhaps also on expected lines. It's a wait and watch as to where we go there, but 24,000 becomes that important mark to keep an eye on as far as the Nifty is concerned.
Absolutely. Do we sustain above 24,000? Well, the good news is we have been so far. I suppose the good news also is that companies that haven't performed well this quarter are getting pummeled by the market. I mean, the Nifty 500 losers list, top losers list, is headed by Lemon Tree. And quite a few lemons on that list in terms of quarterly numbers. Lemon Tree down about 9.5%. Their average room revenues, or RevPAR, as they put it, in 3 key cities has slid this quarter. In Mumbai, Bangalore, among them. They put it down to heat wave, election, etc. But others in that space haven't done as badly. Balaji Ameen's another one with a less than desirable quarter. RVNL Hersh spoke about. Look at AstraZeneca sliding down pretty quickly. Garden Reach, again, stocks that have run up, but the companies have yet to actually perform when it comes to the quarterly numbers. In fact, let's start our conversation with Deven Choksi this afternoon with that point. Deven bhai, good afternoon and great to have you on the show as always. The quarterly numbers, especially for companies in the broader markets which have seen a fabulous run-up on expectations, order books, future earnings, etc., if they've been disappointing, the market has punished them. Do you think that that's, a test of things to come?
Yeah, good afternoon, Tamanna, and thanks for having me on the show. Well, I think this is something which is always realized, that when in previous 2 years, the company's stock prices, when they scaled up, they were backed by the larger amount of growth in their earnings. And this growth came from the lower base, relatively lower base of numbers, I think, which they carried in the business in most of the companies' cases, particularly those companies which have reported, I think, very sharp and dynamic growth. Probably, I think they were one at the lower levels, at the base levels. Today, they have acquired a base. They are now repositioned at a little better base right now. So obviously, I think the same percentage growth is not likely to come. And that's the realization which is now coming into the minds of most of the investors, the analyst fund managers. As a result of which the narrative is changing. Now the narrative is that I think if the growth is not commensurate with the valuation that the company is commanding, then probably I think the rationalization is required to take place. So there will be a price correction, there will be a time correction going forward in most of the company's cases. And that's what I think we have been vocal about, I think, for last so many interactions, I think, that we have been having. Today, the situation is now real. We are likely to see in next 2-3 quarters significant amount of price readjustment, stroke rationalization taking place in the market, wherein the profit booking will come from the funds, profit booking will come from the investors. And in a way, I think the stock prices which are now commanded the frothy valuation, that valuation will get a little bit more moderate in times to come. So nothing wrong with it, because I think everything is understood that when an economy at a nominal rate of growth is growing at around 11.5%, if the companies are growing double the rate of economic growth, then they deserve to be premium valued. But suppose if these companies are valued 4 times, 5 times the growth, underlying growth, then certainly that adjustment has to come, and that's what we are going to be experiencing. So, well, I guess I think the business conditions remain solid. Opportunities will remain equally good. However, I think the price correction will have to take place in the market.
Got it, Devin bhai. If I can also ask, give our viewers a refresh. What are those 3 biggest sectors where you believe that valuations have run too far ahead and they warrant a correction from a fundamental perspective?
See, when we are talking about the sectors, I think maybe we are also mindful about the companies within those sectors. And I think wherein I think the companies which are there in the mid-cap space or the small-cap space, which have probably moved up largely because of the lower liquidity in those counters. So a higher amount of buying pool has basically resulted into significantly large amount of sharp rally for those companies, and so the valuations. I think they are the first ones to be looked at, because if those companies, they lack the ability to execute the growth for which I think they are valued today, then they would be, I think, challenged. Maybe I think you will find plenty of them under the narratives of public sector companies or PSU companies. You will find plenty of them in the areas of capital goods segments. You will also find them into the defense segments, railway segment. The business condition would remain good for these companies in the sector particularly. However, the valuations probably are the ones I think which are subject to come under correction. That is what I think the mute point we are putting across.
Varsha's joining us now, and Devin bhai will come to you. But, a lot of numbers coming in thick and fast, and AstraZeneca is one of them. The numbers on the face of it have looked quite disappointing, and you've seen that stock slide over 6%. Varsha, what's hurting?
Well, yes, Tamanna, if you see, revenue is up 31%, but if you see the margins are down at 9.8% versus 22% last year. Now, if we dissect this, the cost of goods sold have increased 141%, and purchase of stock in trade is actually doubled. So if you see, cost of goods sold with respect to revenue stands at 59% versus 37% last year. This is what is hurting margins. And when you come down to net profit, so company had an exceptional item of around 57 crore this year, which has actually impacted, and this is the reason we are seeing net loss. If you see profit before exceptional item, that stands at 42 crore. Now, why this exceptional item? This is due to booking of provisions associated with exit with one of the factory site, which they have announced in this quarter. So this is the reason we are seeing the net loss, because of the exceptional item.
So AstraZeneca, let's pull out the intraday graph. It's clearly fallen 6%. There you see after the numbers came out. Before I go in and take a view from Devin bhai, let me come to you, Kush, with regard to the chart on AstraZeneca. What's the trade here? How do you look at it?
Harsh, I think the reaction today is, quite massive. But truth be told, I don't think this stock is any stranger to, sharp, volatile down moves and then, a recovery, soon thereafter. So I would actually perhaps wait and watch. There's a 50-day moving average support that is close to this 65, 75, 65, 50 zone. If it is able to manage to hold on to that, by the end of the day today, whatever time is left, or perhaps even tomorrow, then I think you could see, a favorable risk-reward trade on AstraZeneca. That said, because the stock closing at the low point of the day, you wouldn't want to venture any brave trades just yet. Just give it one more day. See if it does take support at that 50-day moving average. If not, then the supports actually come in a lot lower, around those 6,200 marks. So give it a day. We'll perhaps check in on this again tomorrow.
Devinbhai, if I can come to you with regard to chemicals as well as pharma as a whole, do you see value in either or, chemicals, pharma, both? Is this something which is on your list, because this has been spoken about quite widely? Any specific names that you're liking at this point?
So recently, I think we have been, recommending these two companies, the Divi's Laboratory and the PI Industries. Divi's, of course, I think came up with recommendation a little earlier, 4 months back in April. And PI, I think recently, we added into our coverage list also. Now, both these companies, I think why I'm using the names, may not be seen as a recommendation immediately, because both these companies have appreciated sharply after our recommendations. But here I am using the name. Largely, both these companies have one internal or one inherent, advantage that they have had. Both of them have got the API space, and both of them have got the contract manufacturing kind of an assignment from their customers in their respective categories. If the one is in the pharma segment, second one is, in the agrochemical segment, specialty chemical segment as well. So from a perspective of looking at, this kind of businesses, you get conviction that if on one side, there is a business condition which is improving because their customers are now once again coming with larger orders. And on the other side, if last 6 quarters or so, wherein these companies were troubled because of the high input cost and the pipeline inventory of higher cost. Now, if that has gone out of the system and from the balance sheet, and the inventory now is basically at a lower cost, whereas the business is now growing at a steady to higher rate. So from that perspective, it's a combination of both. On one side, business growth, on the other side, the margin growth. And both of them possibly are getting combined. So that's where you look at some businesses, you buy into those companies for investment for the long term. As again, would like to put a disclaimer that these are the companies which are under recommendations and may have this position in our clients' portfolio, including PMS portfolio. This is only, for the reference sake, I have used this right now.
Okay. Another space that is in focus is FMCG. Now, remember, we've been talking, we're pretty much done with quarter one. At least all the major FMCG players have reported. And one theme that you've heard from pretty much every management is that rural recovery or rural growth has outpaced urban growth. So we've been talking about this rural recovery from the last couple of quarters, talking about the green shoots. Are those green shoots finally showing? What are the numbers telling us? What is the commentary telling us? Mahima is joining us for more on that. Yes, Mahima?
Right, Tamanna. So we have been seeing managements talk about rural green shoots picking up in the past few quarters, as you rightly mentioned. And this quarter, a lot of FMCG companies have come out with a commentary saying that it's finally here. And what a major FMCG companies, especially staple companies, that are seeing is that a lot of companies have seen that rural demand is outpacing their urban growth overall. So what I've done here is compiled the commentary of different managements that have from different staple companies, FMCG companies, of what they've told about the rural growth overall. For HUL, they've said, Mr. Rohit Java has said that HUL's first quarter performance reflects their decisive action of transforming portfolio in high growth spaces aided by gradual recovery in the rural markets. We also have Mohan Goenka, who is the Vice Chairman and Whole-Time Director of Imami, who said that rural demand showed a gradual improvement within slight green shoots which are emerging in Q1 FY25. Mohit Malhotra of Dabur has also said that FMCG sector has demonstrated gradual pickup in rural markets in the past 2 quarters, despite countering challenges such as heat wave and high food inflation. They have seen an overall demand recovery in terms of rural areas. Now, Amit Singhal, Asian. Now, it's worthy of noting here that it's not just the staple companies; it's also companies like Asian Paints that have seen rural recovery. Amit Singhal, who is MD and CEO of Asian Paints, said that this was also a quarter where we saw some shoots of recovery in the rural demand, and in fact they saw that T3 and T4 cities were growing at a higher pace as compared to the T1 and Tier 1 and Tier 2 cities. We also have the management of Colgate Palmolive, MS Jacob, who said that we are seeing rural grew faster than the urban, and we continue to see green shoots in the entire space. The management of Jyoti Labs, Mr. Sanjay Agrawal, said that we will continue to focus on our rural growth, which is giving us a sustainable advantage. Lastly, we also have Sudhir Siddhapati, who's the management of Godrej Consumer. He said that in rural, we've gained market share, and we've seen sharp share gains in modern trade and e-commerce and overall in the rural. We also have the Vice Chairman and MD of Britannia, who said that we continue to make positive strides in rural as we expand distribution footprint and enhance product offerings to align with the regional wear. And they're also preferring, and they're well positioned to benefit from the consumption growth in rural, is what the management has said. But Tamanna, the real question here is that in this quarter, rural demand is surely picking up, but this might be on a lower base as well. So we'll have to see how sustainable this is in the going quarters.
Yeah, fair point, Mahima. Especially we'll have to wait and see what the full impact of the monsoon is. So far it's looking quite positive, but does that bear out? And since we're talking about the space, we spoke today to the CFO of Godrej Consumer, Asif Malbari, on the company's better guidance. Remember that set of numbers? Frankly, were not that bad, except for the top line hit by the Africa business. They forayed into pet food, but the street didn't seem quite satisfied.
So quite a few of the pricing actions have already been taken over the last few months, and hence you will see the effect of that in our revenue growth going forward. Coming to the second question which you asked in terms of margin, if you see our margin journey over the last couple of quarters, including last quarter, we have significantly improved the shape of the business in terms of margins. Even in last quarter, the EBITDA margin of our India business was at 25%. And we do expect the India business margins to stay in this 25 to 27% band by using various levers like cost reduction, mix, leverage, and new innovations. As far as the international business goes, we do see a better improved scenario in terms of margin portfolio. Last quarter, we saw an improvement in margins across all our international businesses. The Africa business, which over the last couple of years was operating at single-digit EBITDA margins, in the last 2 quarters has now moved to a 14% margin. And we do expect, we guided that we will take this business to a 15% margin over the next 2 years. So we're very clearly on that journey. We've also seen improvement in margins in Indonesia and in LATAM. So yeah, we should see double-digit EBITDA growth going forward.
All right. Rajesh, if I can come to you on this one, some FMCG names on your list and Godrej Consumer, would you wager a trade?
So Hersh, the overall structure for Godrej Consumer is on the bullish side. Stock is moving in upsloping channel. Stock is holding above to 20-day moving average, which clearly indicates that near-term trend is still on the bullish side, though market is volatile. But we believe that the way stock is holding up, if it continues to hold above 1420, 1410 kind of level, I think trend may likely to remain on the bullish side. Once stock crosses above 1500 mark, I think that really can extend to 1600 to 1650 also. So I think one should hold on the position in Godrej Consumer. We believe that once market stabilizes, this stock may exhibit good amount of rally on the higher side.
Okay, Devinbhai, if I can come to you on the fundamental side of things, especially on FMCG and the rural play. We've just kind of covered it as an entire theme this time around. And we saw the numbers on Godrej Consumer as well. Maybe not impacted not because of rural or domestic factors, but nonetheless, how would you play FMCG, sir? And how should one look at the rural play now going forward?
I'm convinced about, I think, the growth prospects as far as I think the FMCG companies are concerned. I'm also convinced about 2 more possibilities. On one side, I think the raw material prices, and on the other side, I think the market. Raw material prices, we believe that I think given the kind of strategic execution of managing the food product and its inventories, particularly food product inventories, I guess I think the government is doing sizably big job in ensuring that the management of the prices, as far as I think the food product raw material is concerned as well, I think is in the control. On the other side, with the higher amount of disposable income in the hands of individual, because of the larger spending by the government, and that too, I think a program for spending for next 10 years very visibly spelled out. We believe that I think the amount of money coming in the hands of rural consumer will also drive the demand. Now, in between the two, I think the companies will have to find the success of two or three counts. One, the product and product innovation. Second, most important part is that I think the supply chain logistic and its management, so that the customer in whichever geography is operating, I think is getting the product which he asked for. If this chemistry is successfully employed, which in most cases we are seeing getting employed, be it Hindustan Lever, be it Nestle, be it Britannia, for that matter, I think those companies are actually executing this chemistry so very well that one is getting the clarity that yes, they will grow at a faster rate of growth compared to economic growth. Say, for example, 13 to 15% kind of a growth on a year-over-year basis.
Devinbhai, I'm sorry, I have to interrupt you simply because we're just a minute away from market close and we're just tracking how we're wrapping up the day. But thank you so much, Rajesh Palvia, Kush Bora and Devin Choksi for joining us today. We'll have to wrap it here and hope for a better day tomorrow. Let's pull up and see how we're closing and start with the Nifty and the intraday really losses deepening at close. We're staying above 24,000, but just about. You're seeing that downtick there, right? As we go into the closing bit. Yeah, we're at the day's low. That pressure coming in. We'll see the fund flows and see whether it's more FII selling. Remember, over 11,000 crore rupees of selling just in August. DIIs have been buying and sort of making up for it. But Nifty over 200 points down. Let's quickly pull up the heat map and see where the drag is coming up and then the contributors as well. It's pretty much the same set over there. LTI, Mindtree, Infosys. I reckon the IT index would be the biggest drag, but Grasim as well. On the winning side, life insurance companies have been buzzing and they have these moments on and off. Today is definitely a moment. HDFC Life, SBI Life up there, Tata Motors, solidly sitting up there today and has had a very, very good day. Nifty contributors very quickly to see where that drag is coming in from towards the end, and definitely Infosys seeing a bit of pain. Broader markets, I don't think have fared too much better either, Hersh.
Not at all. Let's pull up the mid cap, small cap. There you go. We're again at the day's low. Can we pull up the graph as well, please? Very quickly. Both the mid cap as well as the small cap around 1/3% lower. But there you go. We're at the day's low where the mid cap is, and if we can pull up the small cap as well, there you go. Can we pull up the BSE 500 if at all, and very quickly take stock? Those are the big movers of the day. Oh my God, Symphony, BASF, those are some real moves that they've made over the last couple of days, not just today. And some of the key drags, something like a Balaji, Amines, so chemical plays, Chemplast, Sanmar also, NoSil also. RVNL, no surprise there, down 5% after that weak set of numbers. Lemon Tree too, we covered that.
So results remain key and the reaction to results remain key.
Yes.
A whole slew of them coming in tomorrow as well, so watch out for that. But for now, from Hersh, me and the entire team that put the show together, that's all we have. Thank you for joining us. Stay tuned. A lot more on the other side on NDTV Profit.